Well, guys, if there's such thing as smart money, there's such thing as smart listeners. That's exactly what you guys are. You've been following me this whole time through this whole journey, anticipating this very moment. And what a coincidence that once we got here on the 30-year, 2 days ago, we had that big down movement in commodities, followed by the relief rally, okay? And then incidentally, more selling today. So it started, all right? We anticipated this. We saw it coming. We prepared for it way ahead of everybody else. Because all these other people, they may understand uranium really well, and they may understand gold really well, and platinum really well, and all these things. Obviously, they don't understand the macro picture that well. They don't understand the debt market, and this is why people get caught off guard because of their own ignorance. And you guys listen, and I know you did because you asked me questions. You challenged me on this day right here. You said, hey, why are commodities selling off and the broad markets are going up? And I responded. That was a question on Twitter, right? And that's a good question. And I responded. That's what led me to make that flash update. And I said, look, they're just playing chicken with the Fed, all right? The market has its time coming, okay? Don't worry about this. This was a dead cat bounce. We're going lower. And why wouldn't we go lower? Okay, because the Fed is being hawkish. And the whole principle in talking about the bond market this whole time is that we know and we anticipated them being more hawkish than the rest of the market expects, because the rest of the market is fully anticipating and even pricing in a reversion, okay? The market is pricing in the Fed rolling over and lowering rates. And so that's how we know that the Fed will likely surprise to the upside, even if they do end up turning around and reversing. We know, and at least believe, that they will likely drag the market to a point that it did not foresee coming. Think of it as a black swan. Nobody saw it coming. Even though it's perfectly predictable, nobody believes it. And so, in effect, it'll act like somewhat of a black swan. They're going to catch the market off guard. These rates are going to go up higher than they anticipated. And look, this has massive implications. You have to understand that the bond market is the debt market. Okay, we are a debt-based economy. All right, and that's a whole video by itself to explain that. But if you don't understand the bond market, then that sentence alone should do it, right? This is the debt market. We are in a debt-based economy, and debt is collapsing. You understand? Because as rates go up, it implies that people are selling debt. That's why the rates go up, because the rates will go up and up and up and up and up until they catch a bid, until somebody says, oh, 8% is good enough for me to take a risk and buy this, right? And then as people buy, rates will go back down. You understand? So look, this is collapsing. Debt is collapsing. And this is going to cause massive, massive panic and sell-off in the broad markets. And nothing is immune to it. I don't care how bullish uranium is. I don't care how bullish gold and silver are. It doesn't matter. It's all going to collapse. And the people who don't understand that, and let me show you, let me show you some examples. Let's see what we got here. Look at this guy. He said, oh, I saw that too. Uranium ain't getting no love today. Almost seems as though the sector was singled out. Did anyone say manipulation? Yeah. There's so much manipulation in the markets today that literally everything is red. Right? And this guy has no idea what's going on. And so he has to invent a narrative to rationalize in his mind why the thing he likes is selling off. Because in his mind, it doesn't make sense. Uranium is bullish. It should be going up. So why isn't it going up? Well, it must be manipulation, even though everything is selling, right? And this is a perfect example of what I'm talking about all these people being unprepared, having no idea what they're doing, not understanding broad markets, not understanding macro markets. I mean, and that's why we start every single day right here at the 10-year, because we get it. And, there are people out there that get it. I mean, look at FX Hedge, Margin Call Friday, right? He understands, he gets it, right? Look at this guy. This is an unreal puke. I think they're just screwing retail. Watch them bid it back up after today's margin calls. That's right. Like, more people are just justifying in their minds what they don't understand. And I'll just stop it at that. But you guys are smart listeners. Because you paid attention, right? You heard what I had to say and you considered it, right? And that's it. That's what open minds do. They hear information that's not necessarily readily available or popular, and they consider it, because that's open-mindedness. And that's just a contrarian view, and it's paying off for us. So with all that out of the way, with the long-winded introduction out of the way, what happens next, right? That's probably your question. Where do we go from here? Where do we buy? Let's go. But first, before we proceed, we're going to talk about Vital Metals. We got a trading halt. This is one of the companies we started talking about a couple of weeks ago. I bought it at 4 cents. I encouraged you guys to do so as well. And then when we came back for the retest of the breakout, I gave you another recommendation there if you were so inclined to take a position. And now we have a trading halt as a big deal was made with Schaeffler. It's the first of its kind European rare earth deal. So Vital Metals will now be directly supplying their rare earths to Retech. And these are going to go directly into electric vehicles. So this is a big deal. We likely bought just in the nick of time. So for those of you who bought with me, congratulations. We'll cover that later, but that's coming up next. All right, we're going to go ahead and start with uranium. We'll try to cover all of them, but we'll try to blast through them as well. Especially for the regular viewers who have been watching every week and kind of already know what we're looking for. So we came down and touched the 50. That was the first target. That's an easy call. If you have no exposure at all in uranium and you're looking to get in, this is a place to get your feet wet. Go 25, 50%. Go ahead and get in, right? But with that being said, after the sell-off today, considering everything else we're about to see in conclusion, I think we still have further downside to go. That doesn't mean we'll get it, but I think it is likely. So you got to measure your risk to reward. This is a strong buy support level, but I do think we have further downside to go. So with that being said, whether or not you buy here really depends on your personal situation and how much you already have and how much cash you already have. But we can extrapolate this one to another. So going to URNM, we broke the trend line here and came and we touched the 50. What a surprise, right? We've been looking forward to that. If you were following me on Twitter, I was breaking this down in real time. We have this very clear head and shoulders right here, okay? And we broke. And then we came to the trend line and we broke. That's very bad. If you take the measured move on this head and shoulders, gives us about 745, okay? Come down, gives us about 745 right there. Guess what that is? It's a horizontal support. Look how strong that horizontal support is. What a coincidence that is, huh? So that's your first price level to be eyeballing, honestly. Once you broke below that neck, the catch on the 50 is nice. But looking to further downside, I would definitely be eyeballing that 80. Again, if you have no exposure whatsoever, this could potentially be a strong buy zone for a rebound. So you could take a 50% position. However, if you're more aggressive or you're already in and you're looking for a better deal, I would honestly be looking for this $80 zone. And then beyond that, I would be looking for the $75 zone, which also coincides with horizontal support here, right? And it coincides with 50 on the weekly, all right? That's 72. So by the time you get there, it'll probably come up and be there, you see? So that would be a very, very, very strong confluence. That would be the kind of the bottom. I mean, if you get right here, you back up the truck, all right? Going down again, SV. I did buy more here, all right? I bought it right here, a 1010, I think it was. I added some more. I think that some of these equities are going to play out a bit differently. They're not going to be equal across the board. We talked about that in the past too. Coming up on Kazatomprom is a perfect example. But you're coming back to the the baseline price here. I went ahead and added some more here as well. If we get further downside, I'm just going to have to watch it and see and probably start chasing momentum. But I've already got enough of a position, especially down this low, that I could hold out and wait. And despite everything that happened today, Kazatomprom barely moved on no volume. All right, keep that in mind. That's very important. We're going to move on. Centrus Energy. It's been bouncing in this technical range. I mean, we have our chart so perfect. I mean, all of these key levels, it's just been bouncing on them perfectly. And I mean, these have always been here for, months. So what do I think happens next? Well, depending on if we get that next leg down, this $20 mark has always been the place I wanted to add. Okay. That being said, there was a pretty interesting article that came out like a week or two ago from the Department of Energy, and they almost made it sound like it's a foregone conclusion that they're going to give Centrus Energy the contract. The language really caught me. It raised my eyebrow, and it almost made me want to go ahead and get back in. So things might be changing for Centrus Energy for me. I think I'm starting to look for a spot to get back in. If you're very aggressive, that $29 mark is the first spot. Okay, below that's 20. I don't think you'd make it below that. You might not even make it all the way down. You might catch something like this. Yeah, something like this at 26.86, something like that. But we'll be watching this one for sure. I am thinking about making another entry. Lightbridge, I sold out here at $7.97, I think. Lightbridge was actually the company I was looking at it, and it gave me the confidence that the rollover was really coming. I could just see it. So I wouldn't touch this again until you get to this lower trend line period. Energy fuels. So we broke this ascending wedge, which was bearish. Okay. And this energy fuels chart implies a lot more downside than it looks. You did stop here at a critical level. Okay. This is a horizontal support. Right? We'd already been kind of tracking that. But you broke the 50. I think the next downside level, is here. Again, I think we're going to catch the 200 on the daily. I think we're going to catch the 50 on the weekly. I think that these are the strong buys that you're really looking for, okay? I don't think the selling is over yet. But again, the prices have come down enough that if you want to get in and add something, if the money's burning a hole in your pocket, you could add today. And your patience has been rewarded. I mean, look at the price level today. All these people telling you to buy up here because it's taken off. I mean, no. You are at the same price you were at back in September of 2021. Okay? You could have been this guy. Well, why be that guy? Why be this guy? Could have been this guy, right? And that's what I'm trying to be. I'm trying to be this guy, right? Does that make sense? So be patient because you will be rewarded. People get out of hand and out of touch with the markets and just don't understand. They're just far more bullish than the market really is. So you will get an opportunity to buy better prices, okay? But you never know what a headland may bring. So if you have no exposure and you want to add, you can take a position at today's prices, okay? Nexgen's telling the same story. We broke the ascending channel there. We broke the 50. I mean, the next spot's the 200. Simple as. Cameco had a nice stop at a key level right here. Some of these companies are going to be more bullish. I don't know if Cameco gets all the way down here, but I'll tell you this much. Let's look at this. I have successfully used trends like this in the past to eyeball bottoms, okay? So if you look at each run up and each run down, each run up and each run down, I have the percentage of the sell-off or the gain in that full move, okay? And you can see the trend on the sell-offs, first of all, 25%, 29%, 36%, okay? And if you say, well, what about, this move? This move had a sell-off. How much? Okay, but look, it's 25%, right? It's right in line with everything else, okay? So we're just measuring the pivot point, turning point, okay? Well, if this was the top of this run and we're rolling over, what should you expect? Something between 25 and 36%, right? So what would be that measured move from here? Call it 27. Okay, look, that puts us on the 200. I'm just saying, if you're patient, I bet we hit it. That's all I'm saying. Global Atomic is so bullish. It's been hugging its 200 already. We talked about that. So the next real strong buy point for it would be the sloping trend. And again, the 200 on the daily. This is personally the one that I'm looking forward to buying the most. And this is already kind of sitting on double support. It has this horizontal support. It has the 50. I mean, it's strong. Okay. So breaking below this would kind of be a big deal. Which means it's more of a buy. I think this company's super bullish, and I added some today here just to be safe. All right. But I saved plenty to catch this if that's where we go. And Fusion Uranium, it's the same thing. All these companies are starting to look the same, right? You're probably sitting on initial support, right? They all found confluence of sitting on that support together at the same time. Have you noticed that so far? Okay. So that's your first buy target realized, all right? Further downside, it's simple. Just chart it. Horizontal support, ascending support, and moving average support, okay? And you can look at the majors. That's why I made a tweet today. I said, look, you can use URA, URNM as kind of your baseline, Because if you get a breakdown, then you'll look to this 80. You get a breakdown from this 80, you're going to look down to 75. Okay? And these things are all going to likely bottom at the same time. Some of them will fall at different percentage rates at a time, but they'll all turn around at the same time, just like they're all falling at the same time. Does that make sense? So if you don't want to go through, I'll call it the hassle of charting everything, you can just use kind of a couple of the big guys. Okay, and when the couple of the big guys find confluence, then that ought to be enough for whatever it is you want. We're going to talk about the ratios again. We did fall out like we talked about before, but we're kind of getting mixed signals. You'll see that this has failed to get back in, though it has tried repeatedly with Cameco. Energy Fuels did make it back in convincingly. Nexgen did as well, though it is being denied at the upper boundaries. URA also has failed, and it is being denied at the upper boundaries. Okay, but it's fallen on that 50. DNN, same story again. So I think I'm going to go back to my original opinion that during this bond market chaos of a sell-off, Sprott may end up being the safest place to be. In fact, it may rise a bit while everything else kind of sells off for a bit. It's a possibility. It's just worth considering. All right, but we're going to have to watch it to see. This surprised me to see how much AG sold off today. It broke clear through this level that we talked about. It broke through 3 levels of support at the same time. So if we have to zoom, well, if you stay here, you can see the horizontal support kind of right where it is. You see that? You got it here, you got it here, you got it here, you kind of got it here, right? You got it right there. I mean, that's a clear level, and that's where it stopped. So it could be possible that it bottomed out here. It could be possible that it just, kind of peekabooed below what everybody else was kind of looking at. We zoom out on the weekly. Yeah, if we break lower, again, I would be looking at the 200 on the weekly, about 11, 12. All right. But that's kind of what you're doing on a case-by-case basis. Look at EXK. It's touching the weekly here. I'm starting to think, even last week, silver was the strongest to me. I'm willing to bet that it holds up better than anything else does. And I'm willing to bet that if you're going to buy anything, the silver stocks are the best ones to buy right now. So talking about gold, GDX was actually one of the major signals that kind of gave me the confidence in the call that we were going to see a rollover. And that was because of the diverging RSI. So if you look at the higher highs and the higher lows on the price, okay, and let's say we'll just kind of visualize this. Well, the RSI was telling the opposite story, okay? We were setting lower lows and lower highs, all right? It was the opposite. And so this divergence is a strong signal that a sell-off is coming. That's exactly what we got. Now, we came here to this 50. That was an easy first call. I think we even talked about it in the last video. But that being said, we could have more downside than this to go. This still hasn't even really corrected yet. So let's continue to watch it and see. But again, we haven't even touched the 50 yet. Overall commodities are very bullish, but the bond market is king right now, okay? And it will reign supreme over all of these equities until it's done, all right? And once everybody's done getting wrecked and margin called, when the money feels safe and comes back in, it's coming back into commodities, all right? You're going to make a fortune, all right? But until then, this is all buying opportunity. That's just hold through your losses because it's too risky to sell them, all right? Because you don't know how long this is going to last. And use your cash to buy. That's it. That's the strategy. It's just that simple. So regardless of what it is you're looking at, it's the same rule. Look at NEM. It came down and touched that 50. Wouldn't surprise me to see it come and touch this, okay? Wouldn't surprise me at all. And that would coincide with everything we're seeing in uranium, right? You get that next leg down on that next level of support. It's 5 to 10% lower than it is. Makes total sense to me. We talked before about NAK being an ultimate lottery ticket. I still am a holder of this. I'm going to continue holding this. I think my average is about 38 or 40 cents now. I don't know. But if it comes down here and touches 30 again, I'm buying more. All right? Because I am convinced, and this is purely speculation. This is a total guess on my part. I admit this, okay? So, grain of salt. But I fully, entirely suspect that NAK will overshoot on the next bull run on gold. Okay, I think we break out of this. I think, you at least come up here, right? Bare minimum. That's just a bare minimum. You're going to come and touch this trend line, okay? Bare minimum. So if you lack confidence and you own it, at least hold it till it gets here and sell it there, okay? But I fully expect this to break out. I think when gold makes its next leg up to $2,500, $3,000 gold, this is going to follow because I think it's only a matter of time. It'll probably require a new president, but eventually they're going to unlock this baby, okay? Because the world's changing fundamentally. I mean, there's no reason not to be getting these resources. We're going to need these resources. It is actually absolutely chock full of them. I fully expect this to change lives one day. It's a total guess on my part. It's a speculation, but I'm still holding it. And if you get to come down here and touch that 29 cents, personally, I'm just going to buy some more. You want platinum? Let's get some platinum. Sibayne Stillwater. We've been watching this stock for a while. We broke the key level here. That's not a surprise. Then the next buy is going to be here at the sloping trend. It's just that simple. Strong major buy below that. Obviously, on the weekly, we've got the 200. Personally, I am looking forward to this. I'm going to buy here. I've been looking forward to it for a long time. Platinum's pretty oversold. Honestly, pretty disappointed with it because we came down for a clear double bottom, went for the breakout. We actually played it on Sibayne Stillwater, made 20% on an easy measured move. But on platinum itself, on the metal, we came up, peekabooed, and failed the breakout. And it did some short to medium term technical damage to the chart. So it's been kind of a bit bearish, honestly, in the short to medium term. Personally, if you're looking to get into platinum, I would be a strong buyer at a potential triple bottom here. Okay, so call it that $930 mark down to 900. I think anything down here, it's a strong buy. And you're only a few percentage points away from it. What is that, like? Call it 5 to 7% away. So I don't even think there's anything wrong with getting in right now. If you're, if you just have to have the best price, I mean, maybe you get to 900. You get to $900, you buy. I hope you took profit on IPI like we talked about, because this is the exact kind of situation that I thought might happen. You get up to this upper support, and remember, we didn't arbitrarily make this up. I mean, look at it. I mean, that was a key resistance level to get to. Prior support is now new resistance. You got up to it, you bounced on it a couple of days, you peekabooed, now it's a strong sell-off. So for those of us who got in back here or even got in here, I know a couple of you chatted in the comments below that you got in right here. I'm so happy to hear that. I hope you took some profits here. The new position to be in now would be looking for this 50 on the daily, okay? You can look to add here, get in if you miss the boat. Long term, there's no reason to think that we don't still have a lot of upside left, all right? I mean, as long as everything's going on with Russia the way it is and everything, I mean, it's got nothing but upside left. So Vital Metals had its big breakout. Remember, I told you I had bought back here. I got in at 4 cents on the over-the-counter. We came up, we came back and retested, came up again, and now we have the market pause. I think that tentatively we're going to see some nice upward action in price momentum now. I think this was a big news event. And so for those of you who got into, congratulations. It looks good. Voxtur, after a nice breakout to the upside, it's dealing with a couple of its own issues. First of all, it's testing its breakout. People are taking profit. You also have the market-wide, bond sell-off that's happening right now. There's a lot of fear in the market. So I think this, if anything, this presents opportunity. If you can come back and test this dollar mark, I think you'd be a buyer here. In fact, if we come down to $1 again, I'm probably going to double my position. I think now that this breakout has happened, if we can get some kind of settlement, you get kind of the profit takers out of the way. I mean, this is just setting up for the next leg up for me. All right, so what's the too long didn't watch in 60 seconds? Well, the bond market is responsible for all of the red you're seeing today. This was a predictable event. It's not over yet. It's not going to stop until the narrative changes from the Federal Reserve or a stock market crash large enough that it forces the Fed's hand. You have to understand that these market forces are playing chicken with each other, and somebody's eventually going to win. Now, For commodities, we are extremely bullish in the long term, especially gold, silver, uranium, and fertilizer, and the things I really talk about here on a regular basis. That doesn't mean in the short term things aren't going to sell off. Nothing is immune to a liquidity crisis, right? Nothing is immune to chaos. You're going to see fear. Fear runs to cash. So that's okay. All that means is you get to buy the things you want to own at better prices, right? Which is why we save cash, which is why we're prepared for this moment. And that's why we're looking forward to the price levels we want to buy at in advance. That way, when they happen, we don't have to sit there and think about it. We're ready to strike because we already know that's the price we want with the confidence we're looking for.